Back to basics. Emotional capital, what is it, and are you wasting it constantly?
Hey everyone, this is my channel to help investors and traders develop a probability based mindset to succeed. Also, try and keep friends informed of what's going on in the markets and the economy, and also a little real estate content as well.
Here we are with another Back to Basics series on emotional capital, what is it, and are you wasting it constantly? This is Dan Max, eXp Realty, aka the Trading Agent, and I wanted to talk about emotional capital. What is it? How are you using it? Do you think about it? Are you just trading on a whim? I know a lot of beginner traders, in a sense, have this mindset of, well, the market's open. Today I have to act. I'm only around watching the market from, say, whatever, 9:30 a.m. to 11:30 a.m., or I only can watch it the last 2 hours of the day. I have to trade. I have to put my emotions and my capital at play during these times. I feel like I am obligated to do things. And the problem that ends up playing out with a lot of folks is they waste what I call emotional capital trying to put their thoughts and processes before and ahead of the market. And what that really means is, and a great example is this week. We have the CPI data tomorrow because it is Monday, December 12th, if I remember correctly. Yes. You have the CPI tomorrow on Tuesday. You have the FOMC on Wednesday, and it's quad witching OPEX. Well, this is the Monday before all of this action. And what are the odds that the market's really going to do anything? And so I have people who are asking me, seeing post online, I'm trading this. I'd like to do that. I think this is a trade. I think that's a trade. I'm looking for this. The biggest question you have to ask yourself is, are you wasting emotional capital? Are you being thoughtful about what the market is going to do and will do ultimately? And so as the Monday before the CPI, the FOMC, quad witching OPEX, what are the odds that the market's going to do much? Do you need to spend your emotional capital trying to predict what's going to happen today? Or should you be more thoughtful about what's going to happen Tuesday, Wednesday, and probably going into later this week as you have even more economic data, retail sales, Philly Fed, Empire State, manufacturing, industrial production, capacity utilization, all on Thursday. So the question that people always, kind of ask me is like, well, what's the best time to trade? Well, you know what? There really isn't an easy answer. Remember that. What I always will say is, I got this little remark that I love from Justin Pulitzer on Twitter. Good guy. The first mouse gets the trap, the second gets the cheese. Well, if you're trying to anticipate a move and you're using emotional capital trying to predict what is next as you go into this huge release, it's just like gambling on earnings. You're trying to guess what the market's going to do, taking on all the risk versus letting the market play out, maybe in a direction that leads to a trap, leads to an extreme, leads you to potential better entries for your trades. Now, this seems all very, abstract, but the reality is, like, if you're looking at the SPY, we talked about once you broke these levels, you had to go last week. And for me, it's been great. I've been sitting on the sideline, haven't made any trades, just sitting here watching, thinking to myself, the 100-day, really like to see the 50% fib, 390 area, all test. And again, what has happened in the last 4 days? Nothing. Drop. Now, some people have traded it and tried to take points here and there. That's fine. If that's what you want to do, that's emotional capital you're spending, which you could be using elsewhere. Because if the market doesn't have big move potential, you can only expect what? Small returns. So if your goal is to chip at small returns, go right ahead. Good luck. I personally don't really have that kind of interest. When I think about probabilities, I also like to know that the potentiality for my move is going to be larger than $1, larger than a bunch of quarters, a couple bucks, depending on how volatile the stock is, obviously. So that's what you have to ask yourself going in front of the FOMC. All right, you need to watch the range lows. You probably need to watch the 20-day. Well, here's the thing. If you're emotionally invested in the market trying to predict the outcome and you're long going into all this stuff, well, then you're hoping it's going to go higher. Remember, you don't make trades. I don't make trades with the intention of being wrong. Like, our brain likes the continuity of believing that we get into a trade that's going higher. Well, this is where, again, the first mouse might get the trap, second gets the cheese. If we sit here with no thoughts, No anticipate, trying not to anticipate exactly what's going to happen because we see the levels. We can sit here and go, okay, if the market hits the 390, maybe it takes out some stops, goes to 389, 388, whatever, 388. Is that a bear trap? Okay, if it is, keep in mind, sentiment's really bearish. Well, what happens if we rally? Now we can look for ranges potentially short. In between ranges doesn't give you great risk reward if you're going to try to trade beyond a minute, an hour, even a day. Does this make sense? So you need to know the levels. Right now, 20 days seems to be the upside cap, low side, obviously the 100-day. I mean, you do the math there, 5 points on the SPY. Is that something that's going to get you excited about the market? And what kind of potential size moves can you expect? Obviously, every stock is different, so you can't really put them all in one basket. But for example, like just watching some of the stocks, it's like, some are up, some are down, some are going nowhere. So I hope this helps because, again, emotional capital is one of those things where if you spend it on trying to anticipate the moves and you can't pivot mentally because now you've spent it all, you've now invested mentally into what's going to happen and you're wrong, now you've created a situation where you potentially are missing the moves. And this is, again, beginners, intermediate, this is where it's going to be the struggle, the ability to pivot on a dime. And this is who I'm talking to, people who can't do that. And even now, I'd rather not. Because, again, I know the way the volatility is set up, the way the market's playing out, it's probably going to be choppy until potentially even later in the week. But we need to see what the Feds are going to say. And one of the things we've said recently about the Fed days is usually the Fed days have been kind of a trap. And the Thursday is the revelation of what's going to happen. Follow through, the next move. So, if you're trading next couple days, please be very thoughtful about your time frames and your positions, where you're getting in, and how you're trading them. Because if you're trading aggressively, then you need to be trading aggressively in and out. You need to be rolling your profits in and out. I mean, taking your profits as they come. Because I think at one of these points, you're going to find yourself in a position where the market's going to, if it's up, it's going to be like sand. It's going to be like sand. It's just going to fall out from underneath you. I'm trying to think sand, quicksand. It could fall out from under you, and if it's lower, it might be able to rip up. So I hope this helps. A lot of people struggle with this. They always think today is the best time. That I flipped on my computer. I have to trade. Always know the past and history are to your advantage. I get amazed how many people ask me about something about a market or a potential trade or setups or certain things. And it's like, when in doubt, use the past as a resource. Now, it might not always be that obvious to you. I get that. But people need to be thoughtful. You got to be thoughtful because, again, if you have a limited pool of emotional capital and you're playing the games through a probability mindset, your goal is to save that capital for the best probability setups. Now, if you want to trade lower probability setups, just remember, think of it like a video game. Like you've only got so much energy. And if you start over trading near term aggressively, well, now your power bank is going to be drained potentially. Like you're not going to be able to, you're more focused on your trade versus what the market is potentially doing. Does that make sense? Because ultimately your trade is going to follow potentially what the market's going to do. So if you're not really analyzing the market overall and you're really focused on a trade, and for example, like today, Netflix is down $8, Tesla's down $8, Adobe's up $6, Microsoft, some of the software names are up. Like there's just, okay, well, they're diverging. Who knows what's going on, right? You got metals, some metals are down, miners up, some miners down, right? Chop. Sometimes you have to chalk it down to chop, and that's where the emotional capital refill comes. And you go, okay, I can wait. I can see what happens. And if you do miss a move, guess what? Welcome to the party. Now you're officially realizing that you've stepped up from a novice to intermediate and go, you know what? I'm not going to be able to hit every move. I'd like to put myself in the best risk reward situations to hit moves. And when I don't chase. I don't get mad about it. I know the market's open like Walmart basically every day. You're going to get an opportunity. Every weekday, unless it's a holiday, there's going to be another opportunity. So sometimes this is like, for example, like waiting for gold to pull back in December, potentially waiting for the market to play out how it's traps, anticipating January effect new money coming in. It's going to be difficult. And if you feel like you always got to trade and you got to be aggressive, that's going to be your downfall. I've been there, done that. If you have any questions about trading, please reach out. The Discord room is not open, but I will open it up for people who are struggling, who are really actually doing the work. I appreciate the love and support. Please subscribe, hit the notification bell. Always doing, posting stuff, trying to keep people informed of what's going on. And if you're on Twitter and you're just trolling, thank you for your feedback. I actually appreciate when people who seem like novices are continuously commenting, because guess what? The market is really good at taking the most amount of money from the most amount of people. So don't be surprised when the most amount of people are screaming exactly the narratives what the market makers want to do. All right, I'll talk to y'all later. Peace.
Hey, thanks for watching. If you have any questions, stop by the Discord room. A link is in the description below. Also, if you'd like to help support more free content, the PayPal link is in the description as well. I appreciate your continued support of the channel.